If you've ever whispered your credit score to a lender like it was your weight, this video is for you. Because that famous, you need at least a 620 credit score to get a conventional loan line that's been floating around for years, yeah, that just changed. And before the internet turns us into everyone gets a house now, let's slow down and talk about what actually happened, what didn't change, and what this might mean for you if your score is under 620. And if you're here in Michigan, I can connect you with a trusted lender who will run your actual numbers and tell you where you really stand. Hi, I'm Ryan Maceri with Maceri Home Group right here in Metro Detroit, and my team helps families all over Michigan buy, sell, and invest in real estate. And one of the biggest reasons people don't even reach out is this one thought: my credit score isn't good enough, and I didn't want to be embarrassed. If that's you, hang with me for a few minutes, because that Fannie Mae update might move you from don't even bother to, okay, we should at least check. Let's put a real face to this. I'm gonna use a fake name, but very real situation. We'll call this buyer Alex. Alex has a steady job, the income is solid, there's some money saved up, rent is paid on time every month, no boat, no luxury car, no midlife crisis motorcycle, just regular bills and a normal life. But Alex's credit score, sitting around 610, 600. Under the old setup, Alex goes to ask about a conventional loan and hears Fannie Mae wants at least a 620. You're close, but you're not there. Let's wait and work on your credit. And that's actually where the conversation dies. The buyer feels embarrassed, feels behind, and quietly goes back to renting for another year or two. No follow-up, no plan, just, I guess I'll try again someday. The frustrating part is that none of the positives really mattered. Not the steady job, not the savings, not the fact that nothing insane was financed. That one number, 620, was basically the bouncer at the door saying, you're not on the list. Now that bouncer just got removed. Here's what actually changed. Lenders use a system called Desktop Underwriter, or DU. Think of DU as Fannie Mae's brain in the background. When a lender takes your application, they run it through DU to see if your loan fits Fannie Mae's rules for a conventional loan. Before this change, DU had a hard rule baked in. If your representative credit score wasn't at least 620, DU usually wouldn't even give you an approved recommendation. It wasn't subtle. Under 620 meant we're not doing this. As of new DU loan case files created on or after November 16th, 2025, that specific minimum has been removed inside DU. DU no longer says you must have a 620 credit score for me to even consider you. Instead, it looks at the data in your credit report, the details of your loan, and the overall profile, and then it decides whether you meet a minimum risk standard. Here's the part that most people don't know. Fannie Mae is very clear that DU itself doesn't actually use your credit score number to measure risk. It uses the underlying credit data and the rest of the file. The score is still pulled, it still exists, but DU's internal decision is based on the full story and not just that one number. So now the shift sounds like this. Before, under 620 pretty much meant game over for DU. Now under 620 means DU can still evaluate your file and decide whether you pass its risk bar. That's a big difference. That's the difference between don't even bother running it and let me see what the system says. Now let's talk about what did not change, because this is where the internet starts freestyling a little bit. You're gonna see dramatic headlines like Fannie Mae ends credit score requirements, or no credit score needed to buy a house now. No, absolutely not. You still need a credit score. Lenders are still required to pull your credit from the major bureaus and deliver those scores using approved scoring models. That part did not just disappear because someone made a thumbnail with red arrows and sirens. On top of that, if your loan cannot be approved through DU, it has to be manually underwritten. Minimum score rules still exist. In a lot of those manual scenarios, 620 is still the minimum, or higher, depending on the program. And certain government-backed loans that might later be sold to Fannie Mae still have their own 620 minimum in their guidelines. These didn't just suddenly vanish in the night either. So this is not no more credit scores. This is not come in with a 480 and a handshake and let's call it good. This is specifically DU, Fannie Mae's automated engine. It's no longer using 620 as a hard, you're out. It's using a broader risk test instead. So who actually benefits from this? If your score is just under 620, this is a big deal. Maybe you're at 600, 605, 615. In the past, you'd be told you don't meet the 620 requirement. So a DU approval for a conventional loan is not happening right now. Now your lender can still run that file through DU even if you're under 620, and DU can look at your income, your debts, your payment history, terms of your loan that you're trying to get, and decide whether you meet the minimum risk level. If your credit card history is a little thin, that can help too. Maybe you're not a big credit card points person. Maybe you don't have a long list of accounts. Maybe you pay your rent, your car, your phone bill, and go about your life. With DU relying more on the actual credit data, that's more room to look at how you've really handled your obligations, not just how long you've been playing the credit game. It also helps buyers who have a strong overall profile with one weak link. Your job is steady, your income is stable, your debt to income ratio is reasonable. You've got some reserves in the bank, that score is still sitting around 615, 610. Under the old setup, that one number overshadowed everything else. Now DU has permission to at least open the file and ask, does the overall situation meet our risk tolerance? This doesn't magically turn every no into a yes, but it moves a lot of people from don't even ask to let's at least run it. Even with that, there are two realities we cannot pretend don't exist. First, your credit profile still matters for what your loan actually costs you. Just because DU isn't using your score directly inside its risk algorithm doesn't mean that your score suddenly stops mattering. Lenders and investors still use credit scores heavily when they decide the interest rate and your fees. And getting an approval at a monthly payment that you like are two different conversations. Second, lenders can still have their own rules that are stricter than Fannie Mae. Just because DU can technically approve a loan under 620, it doesn't mean every lender is lining up to do so. Some of them will still keep their own internal minimum scores for their comfort and their investor guidelines. So you might hear, DU says yes, but the company still wants at least 620. That's not Fannie Mae, that's going to be the lender's overlay. So the story's not everyone under 620 is approved. The real story is, if you're under 620, DU can actually look at your full story now instead of auto rejecting you on that one number alone. And then your lender specific rules decide how far that can go. So how do you use this as a buyer? If we're sitting across from each other at a coffee shop and you told me, Ryan, my score is under 620, so I figured you wouldn't even want to work with me. Here's what I'd say. First, stop disqualifying yourself. The rules literally changed. You might still get a not yet, but at least you deserve a real chance and get some real answers based on your full picture and not on an imaginary rule in your head. Second, don't let TikTok become your loan officer. That's where I come in. I connect you with a solid local lender who understands this DU update, is using the current version, and deals with this stuff every day. They'll pull your real credit, look at your income and debts, see what's actually going on in your file, and then run it through DU. After that, one of a few things is going to happen. You might be good to go right now. DU likes your file, the lender's comfortable with it, and we can start talking about actually looking at houses instead of someday. You might be close, and the lender says, if you pay these couple of things down or give it another month or two, then this will look a lot better. Or conventional might not be the right fit, and we talk about another loan type or a short credit cleanup season just to get you in a stronger position. None of these outcomes mean that you failed. They just tell you exactly where you are on the map and what the smartest next step is. The biggest mindset shift here is this. For a long time, if your score wasn't 620, the default message was don't bother, you don't meet the number. This Fannie Mae change turns that into, let's look at your full situation first. You still need a credit score. You still have to qualify on income, debt, and all the usual stuff. But a lot of buyers who are getting an automatic no, now at least get a fair, let's see what DU says. If you're in Michigan and you're thinking about buying, or you're either under 620 or honestly just afraid to check, here's what I recommend. Reach out to me, send me a DM, a message, whatever is easiest. I'll connect you with the trusted lender who understands this change. They will run your actual numbers. They'll tell you where you stand. with this new DU setup and give you a realistic plan based on facts, not fear. Then when the timing and the numbers make sense, my team and I will walk you through the home buying process from start to finish, so you're not trying to figure this out by guessing. And once again, I'm a realtor, I'm not a lender. I'm not giving mortgage advice in this video. I'm making sure that you're not stuck on the sidelines because a rule doesn't work the way it used to. If this helped clear anything up for you, tap like, hit subscribe, and drop a comment if you've ever been told, you're under 620, don't even try. Because for a lot of people, that conversation really did just change. Until next time.